Separately, the other thing I wanted to ask you about just right now in this digital age, we've had a number of IPOs this year.
Yes.
And there seems to be a huge disconnect between the private market valuations and the public market valuations.
But there's a very good reason for that.
Two proteges in Derek Khosrowshahi at Uber and John Foley at Peloton. What do you think of all this?
Well, when you have a bunch of guys sitting in a room like you would be sitting in a room, and you decide to sell stock to some new people in your private company, you can make up any figure you want. If somebody will take it, and by the way, they're all engaged to take it because they know there's another round coming that's going to juice it even higher. It bears no whatever iota to reality. So if you've got people making up values in a room, and then you take it to the public market, and the public market says, no, we're not doing that. It's obvious.
Hey, Barry, just with
because it's a rigged process anyway. So
the process is rigged.
Well, of course. As is the IPO process.
So what would you
did it work better this time though? Or
I think direct listing is a really good idea. Auctions were tried by Google, and it worked, and I think they could work too. The thing is, you're in this situation where you go on a roadshow to, quote, fill a book, and then the banker that you've signed wants to drive the price lower because he thinks that those people will give him money for other things, so he doesn't care about his, I shouldn't say this, but I mean, he cares about his client, but not as much. And the result is that, you know, companies often, when they go public, as you've seen, for instance, Facebook got in all sorts of nightmare trouble because they sold it essentially too high, right? The truth is that they argued for the high price. It dropped afterwards, but it's way past that.